Hello, friends, and welcome. Today, we are diving into something that, let's be real, affects pretty much all of us, how we spend our money in a world that's going cashless. We're going to get into the hidden psychology behind that simple tap to pay and what it's actually doing to our brains and, of course, our bank accounts.
So let's jump right in. Have you ever noticed that handing over a crisp $20 bill feels, well, different than just tapping your phone for that exact same $20 purchase? One feels real, you feel that little pang of it being gone. The other, it can feel like almost nothing happened at all. There's a really good reason for that.
And it turns out that feeling, that disconnect between spending cash and spending digital money, it's not just in your head. Nope, it is a real, measurable psychological phenomenon. It's this gap between the action of spending and the feeling of spending. And it actually has a name. Yeah, this is where the psychology gets super fascinating. Researchers have actually put a name to this whole experience to explain exactly what's going on in our brains. They call it Spendception. It's this perfect blend of spend and perception. And it just nails it, right? It perfectly captures how the invisibility of digital money completely changes our perception of the transaction. It just makes it so much easier to part with our money without that classic pain of paying that we physically feel with cash. So, Spendception is kind of built on these four key pillars. First up is diminished visibility. If you don't actually see the money leaving your hand, it's out of sight, out of mind. Then that leads directly to emotional detachment. Then you've got perceived ease, one-click checkouts, autofills. It's all designed to be completely frictionless. And when you mix all that together, you get a totally false sense of perceived control, where we almost always underestimate how much we're really spending.
Okay, so that's the theory. But how does this actually pop up in the real world? Well, it's literally baked into the financial tools and offers that we see every single day.
Come on, we've all been there. You're at the checkout and you hear that question. Store credit cards are a perfect example of a tool that uses Spendception. They dangle this immediate, juicy reward, that discount, in exchange for you signing up for a line of credit that makes all your future spending there even easier.
And this right here, this is the catch. That 15% off sounds awesome in the moment, but the interest rates on these cards are, well, they're crazy high. According to Bankrate, the average store card APR is a whopping 30%. That's a full 10 points higher than a standard card. If you carry a balance, even for just a month, that interest completely demolishes any savings you got.
And then there's the other big player on the scene, buy now, pay later services. These guys are absolute masters of Spendception. They take a big, scary price tag that might make you hesitate, and they chop it up into these tiny, harmless-looking payments. It just lowers that mental barrier to the floor, making it way easier to say, yeah, okay. But here's the thing. As Stanford's Ed DeHaan points out, there is a real risk here. These services are convenient, for sure, but because they're so frictionless, it's incredibly easy to start juggling a bunch of different payment plans at once. And before you know it, all those small payments add up and can lead to some serious financial trouble. And all of this frictionless spending can have a really fast, really negative impact on a super important number, your credit utilization. Basically, that's just a percentage of your available credit that you're using. You really want to keep that number below 30%, but when digital spending makes it so easy to rack up debt, that ratio can shoot up, and that can really hurt your credit score. Okay, let's just pause here for a second. You can see how this nearly invisible world of spending can quietly mess with your financial health. If you're finding this explainer helpful and getting some new insights, do me a huge favor and hit that like button. Let me know your thoughts down in the comments, and don't forget to share this with a friend and subscribe. It really helps the channel a ton, and honestly, it motivates me to make more of these. Thanks, you guys are the best. Now back to it. It's not just our own overspending we have to worry about. The same frictionless world that fuels Spendception also makes us vulnerable to a whole other danger, fraud. Think about it. When we're conditioned to just click, trust, and buy in an instant, we naturally let our guard down. And that turns this super convenient digital world into a perfect hunting ground for scammers who are absolute pros at taking advantage of that trust. And the scale of this problem is just staggering. The Federal Trade Commission reported that back in 2022, people lost $330 million from text message scams alone. That's just one type of scam. Scammers are just exploiting our trust in the speed and ease of it all to trick us out of our money. And these scams are getting unbelievably sophisticated. We are talking about AI-powered phishing emails that look identical to the real thing, countless fake shopping websites, and even deep fake videos on social media where it looks like your favorite celebrity is endorsing some bogus product.
They all work by creating a crazy sense of urgency to make you click before you have a chance to think.
Okay, I know that all sounded pretty bad, but here's the good news. You are not powerless in this. So, let's shift gears to what I think is the most important part of this whole explainer, the solutions. Here is your toolkit of actual steps you can take to protect yourself.
All right, let's walk through this. First, you got to create some friction for yourself. Go into your browser and delete your saved payment info. That forces you to pause and think. Second, just be skeptical of scams. If you get a text from your bank, don't you dare click that link. Open a new window and go to their official website yourself. Third, use credit cards for online stuff. They have much better fraud protection. But, and this is key, always pay the balance in full. 4, monitor everything. Set up transaction alerts on your phone. And finally, you gotta master your own mindset. Know what triggers you to spend when you're bored or stressed.
At the end of the day, this is not about going back to a cash-only world. I mean, come on. Digital payments are here to stay, and they are incredibly convenient. The goal is just to shift from mindless, frictionless spending to mindful, intentional spending. It's all about being aware of the psychology at play and making sure that you are in the driver's seat.
So, I'll leave you with this question to chew on. Knowing what you know now about Spendception and how your brain sees digital money, what's one small thing you can change this week to be more mindful? Maybe it's just deleting one food delivery app or removing your saved card from your favorite shopping site. That's all for today, friends. I really hope this gave you a new way to think about your digital wallet. If you found it helpful, please hit that like button and definitely let me know your answer to that final question in the comments. Don't forget to share this with a friend and subscribe so you don't miss the next one. It really does help a ton. Stay safe out there and spend smart. See you next time.